Hello and welcome to Livewire Markets. My name is Chris Conway. In this edition of the C-Suite, as part of Livewire's reporting season coverage, we're speaking to Worley CFO Tiernan O'Rourke. Tiernan will provide some more colour around the key numbers and the outlook for Worley. Tiernan, welcome.
Thanks very much, Chris. Great to be here. Thanks for your interest in the business.
No problems at all. You've just released your latest full-year results. What are some of the key financial figures you believe investors should be aware of?
Well, we're very excited to be reporting today because we've shown aggregated revenue up 21% year on year. Also, our EBITDA has grown 16% to $635 million. And importantly, our underlying EBITDA margin is now 6.5%. So in terms of profit numbers, they're the real key numbers. However, also looking forward, because I think the market also is looking for guidance on the longer term trajectory in this market. Importantly, sustainability related revenue is now 41% of our total revenue number. And that's important because our ambition is to get to 75% by 2026. And so we're well on our pathway. A couple of other numbers that are really important is that our sustainability revenue is now $4.5 billion. So that journey towards that ambition, as I mentioned, is well underway. And the sustainability revenue is now 47% of our wins. So I think what we're seeing in this set of numbers is the high level of activity of customers focusing on getting to net zero by 2050.
Tina, not everything goes to plan, as you would well know, and the market always seems to want more. What are some of the areas where you feel there's some improvement, and how will you facilitate that improvement?
Yeah, I mean, to be frank, Chris, our business is firing on all cylinders, and we are at the forefront of a key structural change in the contractor market, and we are in a formidable competitive position in that structural change. What is that structural change? It's the energy transition. And so whilst the business is operating really well, we do focus on the risks that are ahead. And there are three that we focus on a lot. One is resourcing, because we have 48,000 engineers globally in the 45 countries in which we operate. Engineers are becoming hard to get. There effectively aren't enough engineers in the world to achieve net zero by 2050. So we have to find other ways to do that. So we're focusing on ensuring that we don't hit any roadblock in terms of attracting and retaining quality people. And to that end, our headcount increased 6% this year. The second risk that we're really focusing on to ensure that we don't have any issues is the inflation slash supply chain disruption that we have seen, mostly caused by COVID. But whilst inflation is still evident across the globe, supply chain issues and the disruption they have caused to mostly our customers are starting to dissipate. They're still evident, but they're starting to dissipate. Importantly for us, 80% of our contracts are reimbursable basis, and therefore we absorb inflation from our customers. Our customers effectively reimburse us for any inflationary impact. So that's a good opportunity to ameliorate that risk. And the last risk, which all of us have got to be cognizant of, particularly those of us who are in a true global business, is geopolitical tensions. There are hotspots around the world where we are very cognizant of those risks. And so we're very focused on ensuring that we're in the right geographies, we're working with the right customers, and we are focused on ensuring that we can deliver services globally and not get too caught up in some of the tensions that are occurring in various parts of the globe.
Tiernan, you've just talked about the current market environment and some of the impacts and how you're navigating those. The ultimate question, are your current earnings figures sustainable, and what are some of the key areas for growth?
Yeah, it's a really interesting question, and because of that structural change I mentioned, and there's various numbers being thrown around, but essentially to get to net zero by 2050, the globe needs to spend between $3 and $4 trillion a year on sustainability related work. In the most recent financial year, that number has been around $1 trillion. So we're spending at a third, perhaps even more, or even less, I should say, than that level. And therefore, every year after, we have to spend more than 3 to 4 trillion. So given that we're at the forefront of that structural change, we see that the energy transition, the decarbonization process that the world is going through, and our competitive position, we're seeing that our forecasts going forward, the longer term trajectory of this business is very positive. How do we know that? We know that from a couple of places. We have an order book, which we call our backlog, and we can see evidence in there that that's growing. That was up 14% this year. Most importantly, though, is that our factored sales pipeline was up 90%, 98%, in fact, year on year. And the factored sales pipeline is the longer term forecast of contracts that we expect to win in the next 3 to 5 years. That is growing strongly. And the evidence there is that customers are allocating significant amounts of capital to the energy transition. And because of our competitive position, we are winning more than our fair share. In fact, we were winning a very large natural share of existing markets, but also these new and emerging markets. Also, we are focused on some of the most the innovative areas in the energy transition: hydrogen, carbon capture, use and storage, battery materials, biopolymers, bioplastics. And we have invested $100 million to get at the forefront of those new growth areas. This year, just gone by FY23, we added $1.8 billion to our backlog as a result of investing $67 million so far in upscaling our businesses in those areas. So is our business sustainable? I think when you add all those areas together, we're very positive about our outlook.
Tiernan, you just touched on some of the big themes and some of the big tailwinds and even some of the areas in which you've been spending money. Are there any more examples that you have of exciting initiatives or projects that Worley is working on?
Yeah, I mean, I mentioned one of the risks being resources, Chris, and we're not waiting for a resource wall to hit us. As I mentioned, we increased our headcount 6% this year, 9% last year. So with our purpose, engineers want to work for us. So we have, I think, one of the greatest hit rates on LinkedIn of people wanting to come and work in this business. But that's not enough. We need to make sure that we offer a really attractive environment to work in. One of the things we're doing to help that is automation and artificial intelligence. We already run about 100 automation bots through our organization. What are they doing? They're simply ensuring that we get a lot of our basic engineering work done, which releases our people to higher and more interesting work. There's a lot of complex work coming down the pipeline, and we want our people to get experience on those contracts. So automating a lot of the lower level work is a really exciting initiative for us. And in one of our initiatives, we've just moved our previous head of our information technology group into run AI as an initiative for Worley. We see an opportunity to have our own AI chat GPT, so to speak, that would allow us to augment the amount of automation that we do and therefore release the equivalent amount of hours to doing all this other work. What we don't want to do is to have to say no to work because we don't have the resources. So we think we can get the best of both worlds. And it's important to say that we don't see AI or automation as displacing people. We see it as an opportunity to redeploy and to take a bigger natural share of the market.
Tiernan, a soft economic landing is looking more plausible these days. What would that mean for Worley? Does that grow the opportunity set for you guys?
Yeah, I mean, we certainly do a range of scenarios, and I don't disagree with you. I think it looks like interest rates are peaking. But again, I go back to the structural change in the sector with the energy transition. This is a sector that has a mission, and that is net zero by 2050. I think that in addition to that objective, governments around the world are really starting to come to the party in terms of supporting the energy transition, because when you do your first hydrogen plant or your first direct air capture plant, they're not economic until you build the 5th or the 10th plant. And so what governments are starting to do, and the US government is a prime example of that through the Inflation Reduction Act, is that they are supporting the transition into economic assets that are going to generate energy at levelized costs at or below the existing cost of energy. And so we see that's a really exciting future. And so I think the softer landing will help that, because I think we'll see governments come more to the party in terms of supporting this transition and accelerating that transition. And I think, back to my point about the amount of investment that's required in this sector, I think what we will see is we will see a dramatic increase in that expenditure in coming years as people really get on board with our desire to get to net zero. And we hope it'll be 2050, and certainly Worley's doing everything it can to help achieve that.
Tiernan, you've shared a lot of great insights. Thank you for everything you've discussed so far. Just to put a pin on it, what is the main reason why investors should be excited about Worley over the next 12 to 24 months?
Well, I think our purpose of delivering a more sustainable world should get everyone excited. I think more and more the globe is seeing evidence of climate change, the impact of that. We've got 50,000 people in this organization that have a desire to help with that process. We have the tools, we have the people, we have the ambition, and we've now got the momentum. So, we're really, really excited about the opportunities that are ahead of us. We're very disciplined in that journey. We've just delivered our second consistent earnings growth, and we've now predicting more in the future. So I think Worley's a really well-run company. It's got a great leadership team and 50,000 of the best minds on the planet. And I'm genuinely confident about the future.
Tiernan, it sounds like an exciting time to be involved at Worley, and I want to thank you for your time speaking with Livewire Markets today.
It's a pleasure. Thanks for having me.